able to attend. So welcome very much everyone to the Valley Economic Alliance Pathway to Profit program on alternative and receivables financing solutions. I'd like to introduce our facilitator today, Brett Dickstein, who is our business advisor, and he's just a wealth of information and knowledge on the topic, on this and many other topics. So Brett is a specialist with early stage financing and early stage ventures to help them monetize and commercialize their ideas, their business models, and fund their ideas to bring them to market and to bring them to profitability. So Brett has worked with multinational consulting firms and investment banks, as well as small businesses and startups, growth-oriented startups. We're looking for ways to help them fuel their business growth and fund their business growth. So Brett has been helping also internationally, creating entrepreneurial ecosystems all over the world, incubating businesses and workforce development in 15 countries with the World Bank. So we're super excited to have him with us. He's got his master's in public finance from Columbia University and a BA from Emory College. He's just a wonderful addition to our team. He's going to introduce our other phenomenal speakers. So I will give it to you, Brett. Please take it away. Thank you so much.
All right. Thanks so much, Sonia, for the great introduction. And it's great to be here on behalf of the Valley Economic Alliance. We have a wonderful business advising program that provides pro bono technical assistance to all sorts of companies at all stages of development. So if you need any pro bono and no cost consulting and advising, you can go to our website and you can register at no cost. So welcome to our panel, welcome to our panel discussion on financing and cash flow for small businesses, especially timely during this challenging and unpredictable economic climate. So the topics that we'll discuss today are really ideal for businesses that want to think strategically about identifying alternative sources of capital other than themselves, of course, as we enter an inflationary period. Today, we've invited two players that fit right into our small business financial ecosystem. Let's welcome again Noe Castillo from CDC Small Business Finance and Andrew Krone from Marble Bridge Funding Group. I've worked with both Noe and Andrew to provide innovative financial solutions to all sorts of businesses at all stages of maturity. And we aren't talking traditional bank loans or credit lines or credit cards, but really solutions that get working capital into companies when they need it and they really can't get it elsewhere, or they have real serious bridge financing challenges. So at first, at Noe and Andrew, would you please both take a moment just to introduce yourself and your organization and give us a brief overview of the lending programs that you provide?
Thank you once again. Good morning. Happy Tuesday. Thank you for the introduction, Brad. Once again, my name is Noe Castillo. I'm a loan officer with CDC Small Business Finance, and we are basically a nonprofit mission-based lender that we provide financing for all those entrepreneurs and business owners that are looking to either start their business, expand their business, or sometimes when even the business has some challenges right now, getting that access to capital through conventional means, where sometimes which is going to be your traditional bank, if for some reason they cannot fulfill, that's where we come in and we try to fill in that gap. So we're consider ourselves like a stepping stone, right? Where sometimes conventional financing is not available to you guys. We come in and we try to provide that financing so that hopefully down the line, you guys are able to borrow the money from all those conventional lenders at a cheaper rate. So that's where we really come in. Part of our program or the concentrations that we do in our programs is that we try to provide that extra hand to all those groups that are having challenges, having access to capital. So minority-owned businesses, women-owned businesses, U.S. veteran-owned businesses. So we take a very, proactive approach and try to get creative on how we, look at your requests and try to look at this from every angle. So in regards to our footprint, we do, of course, we provide financing in LA, which is one of the markets where I'm located myself, but we provide financing throughout the whole state of California, Arizona, Nevada. Once again, thank you for the invitation. I look forward to this great panel.
All right, Andrew, you're up.
All right. Good morning, everyone. My name is Andrew Krone. I'm Senior VP, Marble Bridge Funding Group. And I want to thank Sonia again for allowing us to present today, and Brett for doing the introductions here and running the event today. So Marble Bridge Funding Group, we are a commercial finance company. We've been in California now going on 24 years. I've been here for 21 years in the business. We are a direct lender, and we provide receivable finance, purchase order finance, and contract finance. We work with companies that are start-up to 50 million a year in revenue. And we basically probably have the easiest credit scoring to get in and get the financing. And we work with all types of businesses. But for those of you that are in on the workshop today, that we provide businesses that provide products or services to another business and have receivables. So we work with those types of businesses. We don't work with cash-based businesses, but Noe does. And he works also with receivable-based businesses. So between the two of us, there should be a solution out there if you're looking for working capital to grow your business.
All right, super, thanks. So here's a few questions for both of you. So Noe and Andrew, just feel free, whoever wants to jump in first, please go for it. But we definitely want to hear both of your perspectives on the next couple of questions. So what does it take for a client to get funded with your organization? You know, what are you looking for in terms of maybe credit score or years in the business or collateral or a business plan or other requirements?
So Noe, I'll start first. So since I do the underwriting as well, the clients that come to us, we see a lot of different types of businesses. They could be contractors, they could be engineers, they could be software companies, they could be consultants of different types, any type of business that provides a product or a service to another business or government entity. So if they're receivable based, that's the client that we are looking for, because we basically fund the receivables. So when they grow their business, they may have 100,000 in invoices on the books. They may have $1 million of invoices on the books. And what we're able to do is instantly turn that receivable into cash, so they don't have to wait 30, 60, 90 days to get paid. And they can take that capital to buy more equipment, more merchandise, or hire more people, or whatever they need to do with it. So it allows them to put that working capital to work. And as far as the underwriting goes, typical like a bank, we will ask for financials. And if you're a startup, you may not have those, that's okay. But we ask for financials, tax returns. I mean, everything that you would normally ask for if you were applying for a traditional bank loan. But from the underwriting side, it's a lot easier. I brought on clients with 480 credit scores. I brought on clients that have had tax liens and various histories. So that doesn't concern us as much as the business is growing rapidly. So clients who seek us out can grow double, triple, 3, 4, 5 times if they have the cash flow. And a lot of my clients fit that profile, and that's why they come to us.
Okay. So Noe, same question for you. What does it take to get funded, with your organization? What's like the typical profile of a business that you fund?
Yeah, so in this case, so with us works a little bit slightly different, because in our case, I mean, we'll consider the credit. I mean, although our requirement is not as strict as sometimes the bank, we do have a minimum FICO requirement of 620, right? Now, if for some reason the borrowers, maybe don't have that FICO score, and if there's a good reason behind it, because sometimes people go through illness and sometimes they miss skip making payments. So that's something that we can consider. Sometimes people go through divorce. We understand that. So if there's a significant factor of why the credit took a bit of a damage, then we'll definitely make a point for it. But other than that, I mean, at the end of the day, with us being a bit of an alternative lender, we take an approach of why we should do the loan rather why not do the loan. So we consider different factors. So for those that are considered trying to do a startup, we want to make sure that borrowers have some experience in the industry, making sure that there's going to be some skin in the game, make sure that they're going to have a good injection into the project, and making sure that they've done their homework. That's going to be very important because regardless if it's a startup business, an early stage business, or even established business, we want to make sure that people done their homework when they come and inquire for a loan, so that we understand that they really understand their project. At the end of the day, that's what we want to know. We want to build that confidence with borrowers that they understand their project. So in regards to other factors, we just want to make sure that once again, going back to the credit, making sure that there's no delinquencies and things of that sort. For those businesses that are growing rapidly, I think Andrew will be probably the best solution, because sometimes some lenders might not be concerned with that. But I mean, for every prospect, there might be different type of financing. And once again, and the best way to approach that is by really the borrowers really understanding their project. So, but we're pretty open to different projects.
Okay, super. Thanks. Those are really good overviews. Another question for both of you: what type of businesses do you work with, and what types of businesses might you not work with?
I'll take that first since I'm already unmuted. Okay, so in regards to us, I mean, we're very open in regards to industries. The only industries that, of course, we're not going to be able to do is, as long as they're not federally regulated, like, so cannabis, anything that has to do with cannabis, of course, we won't touch, right? Although in California, it's now legal, in many other states throughout the country, it's not, right? So that's one of the biggest industries that I know it's been having a very significant growth over the past few years, but unfortunately we cannot still touch. So and anything also that could be derived from that. So like, for instance, smoke shops is something that we get a lot of inquiries about, but unfortunately, because smoke shops sell items that are related to cannabis, we won't be able to touch. So that's one of the big ones. Anything, of course, that has to do with adult industry, regulated as well, we won't touch, right? I think a couple of industries that I want to point out that I know we get a lot, especially in California, it's going to be number one, trucking companies. Unfortunately, we're not touching those right now. And the second one is going to be gas stations. Anything that has to do with environmental issues, unfortunately, that's something that we will not have an appetite for. But other than that, pretty open to every industry you can think of: manufacturing, tech companies, food industry, restaurant, medical. I mean, anything else you can think of, we're pretty open to that.
Super.
Okay.
Andrew,
Yeah.
Same question for you. What kind of businesses do you work with, and also will you not work with?
So the list is pretty long. As long as the business doing business with another business or government agency. So as Noe doesn't do truckers, we do truckers. We have several large truckers in the state of California, some working for Caltrans on the highways, some working with high-speed rail right now as an example of truckers. We do engineers, we do architects, we do contractors. One of the business models that's very hard for banks to finance. We do a lot of subcontractors working a lot of jobs, whether they're working on government jobs or working, for private industry. We have importers, exporters, consultants, anyone that you could think of. If you're a business and you provide an invoice to another business or government entity, that is the business that we go for. We don't fund businesses that are cash-based because they're not receivable, invoice-based businesses. So I don't do clothing stores, I don't do restaurants, I don't do anything along that line. That's something Noe would be an expert in and knows how to get done. We don't do cannabis either. And we don't fund doctors, dentists, and chiropractors as part of our business. They have specialized receivables with HIPAA laws and things of that nature. But I have done physical therapy. If there's a physical therapist who provides services to nursing homes, so they're billing the nursing home, we can fund that. And they usually get paid slow because they're getting Medi-Cal or Medicare payments. And so they need the cash flow to grow that business. So again, a B2B model. is all we're looking for. And you could be a startup. So we have signed several startups. We're dealing with one this morning on the phone that's less than a year old, only has about 90,000 revenue, and now may explode to, you know, 1 million in 1 year. And they just can't get enough bank financing to grow the business. And they're looking for us to fund the receivable side so they can make payroll and grow it quite rapidly.
Gotcha. Okay. Interesting. So now we have kind of a general idea of the kind of enterprises and businesses that both CDC Small Business Finance and Marble Bridge Funding Group want to do business with. What then would be the first steps that an entrepreneur or small business should take if they wanted to access capital with one of your organizations?
Go ahead, Andrew.
Hi. So at my end, the introductions, a lot of them come from bankers. They come from CPAs, they come from CFOs, they come from Brett, they come from SBDCs, Valley, all different types of organizations send clients to us because generally to find us, people just don't know we're out there. So that's what these webinars are about. I've been doing them for over 20 years now, and I've educated thousands of small businesses. I'll be up in Sacramento next week for Small Business Week, also on a panel. And essentially, that's how the word gets out. So when they find their way to me, it's generally a nice conversation. I want to hear all about your business, how long you've been in business, what are the ups and downs, what are the challenges. And because I do the underwriting within that call, I can figure out whether you're a fit for us or not, or I could say, no, it's not me. You should give Noe a call. And so we refer all to each other. It's one ecosystem. We all know each other, and we're here to help you. And we can hear what your story was with the bank and why it worked, why it didn't, why the bank won't give you enough money. I've been doing this 20 years. I know a couple thousand bankers. I pretty much know how everyone operates, and I can figure out what's going on. I can look at your business and tell you why you fit one model, not another model. But in doing those conversations, I want to learn everything about it to make sure it's the right fit for us. And then I can communicate to you in that call how we would operate from a high level. And that will give you the knowledge you'll need to make to see, oh yeah, this could be a good fit. And if we go down that path after that initial call, we have a package we would send out to you asking for financials, tax returns, and different documents that most financial institutions are going to ask for. They don't have to be CPA audited numbers like a bank may ask for. We work a lot easier on that level. But we get to know you, and we're looking at the business, not just in ratios and boxes. We're just trying to understand your business. With that, we'll have a second call where I can walk you through those financials, make sure I understand everything. I can point out things if you're doing things right or you're doing things wrong, and how you can tighten up your business from that end. I've worked with so many businesses over the years that I have a really good background in many, many different types of businesses. And so I know what my expectations are and whether you're running it within what's happening in the industry or not. So I can give you a lot of free advice. At that stage, I say, it looks great to me. This is a great fit. And then we're going to spend time and I'm going to teach you how we work in very, very fine detail. On the simplicity part, it's really quick in 5 minutes, but the deep dive into it, we're going to take a half an hour to get into that. You'll understand that end and you'll say, I want to go forward. We want to go forward, and then we'll start the underwriting process. And if you're next in line to underwrite, I usually can get it done underwritten in 5 days and have you funded within the next 5 days. So it's a very, very quick process. But in one phone call, we can figure it out for the most part.
All right, thanks. So yeah, I think in my experience working with businesses with both Andrew and Noe and their organizations, presenting them with your basic financials, letting them see the tax returns for the last few years of your company, letting them check out your financial statements, even a credit report that you pull yourself that doesn't affect your credit score, giving them a general idea of your business. And if you know how much money you're looking to raise, how much and why, what are you going to do with the proceeds? These are all things that can give the lender a really good sense of the performance operationally and financially of your business, and whether you might be eligible and they might want to proceed with going down the road of doing their whole application process. So I think it's pretty similar to get in the door of one of these organizations. Noe, for CDC Small Business Finance, a couple questions for you. Just how much funding can you provide? And then can you fund companies with challenging credit? And what might be a reason why you might turn a client down potentially?
Yeah, so so in regards to our loan programs, we do anywhere from 20,000 up to 250,000 that we do as our program. And I mean, in regards to, you know, the people that really come into us is people that maybe, once again, that maybe went through their conventional bank, whatever the bank of their choice was, and maybe didn't take it because maybe their FICO score was not, you know, high enough, or maybe their business was not, you know, they didn't have the time length that the bank required. I mean, most of conventional banks are going to require for the business to be established 2 to 3 years most of the time. So sometimes businesses don't have that. Maybe some businesses are on the early stage where they maybe opened a year ago or less than 2 years ago, and sometimes, you know, conventional banks won't take them. So this is where we come in, where we, you know, we try to be more proactive on that and provide that financing. Also, startups, like I mentioned earlier, something that conventional banks will do, we will take that approach. You know, as far as once again, we're pretty open, we're pretty flexible. The times where I've been seeing that I have not been able to approve a client is for a few reasons. One is because, you know, sometimes they don't disclose upfront things that they might be under credit, and you know, and that's one of the things I always tell people. It's like, tell me about you know, your project, you know. And I think based even on the prior question that you asked before, one of the first steps to access to capital is really understanding your project. You know, a lot of times when people come to me and they say, give me the most that you can, or I don't know, I mean, those are red flags. That's what a lot of bankers, a lot of institutions, either Andrew or myself, are going to have a bit of a red flag saying, oh, wait a minute, like this person know what they're applying for. And that's a big concern. You know, instead of when you come and say, hey, this is what I'm looking for, this is the exact amount that I'm looking for, and this is what I'm trying to do with the capital. Now we're going to be more careful listening, because now we understand that the person done their homework. So, but, you know, back to the question, we have the client borrowers just because sometimes they have, you know, a lot of issues with personal credit. Maybe they have a lot of collections, you know, maybe, you know, things that they defaulted from and then they never took care of. You know, we understand that sometimes some things happen in life where sometimes, you know, you get caught in the middle of it, and we understand that. But if we see that you made an approach to at least being able to fix it, even if maybe you weren't able to feel like a final good outcome with the institution, but if you can show us proof that you try, we will move forward. But when we see that you didn't even try, then we will not move forward. I mean, because that's a character issue, right? So we want to make sure that people, you know, especially those that are looking to open or get into business, that they take things seriously and they move forward with trying to fix any matters with their credit. But you know, pretty overall pretty flexible, and once again we'll try to look at different angle to make the loan happen for the borrowers.
Okay, so yeah, I think that there's a key takeaway there, is that number one, if your credit score is really low for whatever reason, you know, that it doesn't automatically disqualify you, especially from going to both of these organizations. You know, they'll kind of look through that at the character that you're bringing to the table, your business model, you know, if you cash flow, and, you know, if you're taking steps to improve your credit. And we do have colleagues, if you're interested, reach out to me or Sonia. We have colleagues that can help you with credit counseling to try to figure out a strategy to get your credit up. So you're taking those steps to eventually improve the credit. And the other thing, I get this a lot too, is when I ask, you know, our clients, how much do you need? And they say, as much as I can get. You know, you have to be really specific. You know, you have to kind of, you know, narrow it down to doing some numbers, you know, crunching some numbers and figuring out, well, how much do you need and why? And what are you going to use it for? And you have to really be able to articulate that, because lenders or financiers, they don't just want to give you as much money as you want. You have to have a plan, and they have to understand, you know, how you're going to use the money that they're giving you, and how you're going to ultimately be positioned to pay it back. With that said, Andrew, I'd like to ask you about what you think, you know, is the forecast for lending, you know, in this year, you know, the rest of this year. You know, what are your thoughts on that, the lending environment?
All right, I'll take my best shot.
Yeah.
I'm doing my usual networking with bankers, with real estate people, with all different types of, what I call experts in their field to try to get an idea. So I think on the lending side, what I'm hearing from some of my SBDC consultants, that the banks are tightening up. So I think in this type of an environment, there's a lot of risk going on. And, it was a little bit easier when the government was giving away a lot of free money, as most of you know, PPP loans, EIDL loans, those are pretty much coming to a close. There are some state loans that are available and grants that are still out there to be had, depending on the city or the state of California, what their requirements are. And so the next step is, getting traditional lines of credit. So, banks are looking at all the debt you have on the books, all the new debt you may have acquired. I think it's going to be a lot harder. There seems to be a move for banks now to release clients at this stage that aren't fitting quite the same ratios, because they put everything in a box and they make that move. So we're starting to see that at our end because they come to me at that stage. I also have a lot of younger companies who have been holding back with COVID to get going. I have a disabled vet group where there's like 3 partners, and they're able to get millions of dollars in contracts. It's all a staffing model, meaning that they can put people to work and bill weekly. But as a startup, they're not going to be able to get the bank financing they need. And they're projecting first year out 8 million in revenue for a startup year 1. And so they know we can fund the receivables as fast as they could create them. And that model works extremely well for us. So they cover 1 week payroll. Week 2 payroll, they have invoices from week 1 because they can invoice weekly, and we can fund that growth. And they're really excited to partner up with us. So different than Noe, we don't have really a credit limit per se for any of our clients. We can fund easily up to 5 million a month. And I've been doing this 21 years. No one's needed quite that amount of money. I've had several borrow $4 million, $4.5 million, but never up to 5. But for the average business that I see that is about 500,000 revenue, 20 million in revenue, I get people who need 100,000, 500,000, 1 million, 2 million. We can do that. And we have no minimum funding requirements. So if you go through our program and we bring you in, we really give you the tools to grow so you don't have to say no. But in our environment, we haven't changed our lending standards at all to COVID, to any of the economic declines that we've had over the various years. Like you, though, we're aware of who you're doing business with. So if you're doing business with Sears or JCPenney's or some of those names that we all know about have had problems, we're aware of it with you. And so, yeah, there may be some clients that we wouldn't fund, but most of the time, it's not an issue. Government has been fine. Apple, Google, or some of the clients our clients deal with, they've been fine. Caltrans, all over the country, Home Depot, you name it. We've had clients who've done business with everybody that you can think of, and we've been able to get it done, big accounts and small accounts alike. But I think you're going to see tightening up on that end. The real estate side, there's no doubt rates are rising right now. All I could see in that area, there's not enough houses on the market, and prices are still going up through the roof. I'm shocked every time I look at the value of my home, how much it went up in the last 30 days. It's absolutely crazy. I don't know if that's going to change. COVID, I have no idea. I'm reading the latest news today that now they're saying it's starting to increase again, even though the doors are just opened, how that will affect anything. So there's a lot of uncertainty. But I would say from traditional banking, it's going to be tighter. I think people like Noe and me are going to get a lot busier as we go along. And the businesses that have held back are starting to come out of the woodwork now. And we're seeing a lot of young businesses come to the table. And that's what I'm doing every week. And I got one I'm working on today that does a lot of work with Whole Foods. And they just acquired a business. So there are people looking to get out of their businesses. Might be a good time to go hunting to buy a business at this. But from traditional banking, it's going to be harder, no doubt.
Okay, yeah, interesting. We don't have a crystal ball, so we don't know too far in the future, what's going to happen. But thanks for that perspective. And it's good that you guys are still super active. And even through the pandemic, you have been creating financial solutions for, business owners. So Noe, kind of similar question. What's the current lending environment at CDC Small Business Finance? And do you anticipate, have there been any changes, or you anticipate any major lending policy changes as we kind of are in this inflationary environment?
Yeah, so I think back to Andrew's comment. I mean, although there's still some some support with some grants, I mean, that is pretty much, it seems like it's kind of dying out as we speak, right? I mean, talking about grants, talking about the idle program through SB8, I mean, those are things that are coming to an end. So now becomes a question, or that business owners, or even potential business owners, should be asking, what's next? How am I gonna get this capital to get things going, right? So it just taking that serious approach and having this conversation with their CPAs or accountants and figure out, is like, okay, well, let's talk about how I did this year, and what can I show to show the true potential of my business when it comes to filing my tax returns. That's really something that business owners should be kind of really working with. Just because also one of the biggest factors that are kind of happening is that, and I think Andrew pointed out quite well, is the fact that there's an increasing cost of raw material, which affects business in general as well, especially those that are trying to expand into new locations with tenant improvements and things of that sort. Those are going to be increasing costs that have been kind of happening over the past months that we've seen. And then also, and then with that also, some other businesses are going to be affected with some other products and services they sell as well. So they got to understand, how to equate that into as they move into the operation, and making sure that they still being a profitable business. That's part of that. And then also, another point that Andrew brought to the picture, I think was great, is the fact that right now there's no more pandemic. Now it's called endemic, right? Which I think this is here to stay. So now, what's going to be the business approach to operate as they move forward, especially those that are going to be directly affected, like retail spaces, restaurants, food services, things of that sort. I mean, what approach you're going to take to continue business, and assuming that we have to shut down again for whatever the reason might be, how are you going to continue doing business as we move forward? So I think those are things that, business owners need to take an approach on that, and figure out what's going to be the next step if there was another shutdown, because that's one of the biggest things right now with a lot of lenders, is that especially those industries that were mostly affected, what's their plan B if that happens, so that they can have access to capital.
Okay, thanks. This is another really good take on what's happening in the market right now, and the financing, of your businesses. So a key takeaway message, though, is that you do need to present sort of a plan on how you're pivoting or making, the appropriate business model decisions, the business model in the sense of how your company generates revenue, because whomever you're going to work with to help you finance your operations or working capital or accounts receivable needs, you're going to need to, introduce to them your plans on how you generate, cash flow every month to repay them, right? Or to meet those financial obligations and service whatever debt that you have. So it's key. Okay, so let's continue. Have a few more questions for both our panelists, Noe and Andrew, before we open up to some questions. So now's the time to start asking away those questions in the chat, if you haven't already, and we'll get to those shortly. So for Andrew and Noe, what tips can you give our participants to successfully access capital and prepare to get through this challenging market that we face right now? Maybe you can share a few tips, and then we'll open up to the last couple questions.
I would say for small businesses, depending where you are in your cycle, whether you're brand new and you haven't opened your doors, you're 30, 60, 90 days away, or planning, reaching out to Valley Economic Alliance, reaching out to Brett, reaching out to the SBDCs. There's free consulting available to you, and you should take 100% advantage of that situation. There's no need to have to pay somebody, thousands of dollars to be a consultant when you first can go down this avenue and run it by everybody. I mean, there are hundreds of consultants in Southern California with these organizations that specialize in all different fields, have all different backgrounds, and you want to get to these people. If you have a CPA, of course, that's another person to go. And anything on the legal side, you should have a lawyer. So you have your team of experts behind you to get that together. So when you're coming in to somebody like me, because I'm not a bank, I could speak a little bit more freely. I'm not, stuck in a certain box of communication. So if I'm talking to you just to have a chat about what you think you're going to do or where you're headed, I will give you a total honest assessment of, where I think you're at, what you're missing, what you need. But for the most part, everybody, it depends on where you are in your business cycle, where you've been out there doing 5-10 million a year. You obviously have learned enough to grow that big, and that's to be congratulated. If you've had, economic hits in this environment, which a lot of businesses have, then you got to sort of reinvent yourself. And again, you may be losing cash every month. So what's the plan to turn that around? So where, you could have a loss at the end of the year and a bank will say, we're not funding you anymore. We could bring you in because you can show us that plan. And so if you're working with Brett or you're working with consultants that can help pull that together, or you can talk to us and we can look at it and give you some advice of what we see might be helpful, or point you in directions. So we have thousands of contacts as well, all different people at all different levels. There's all different ways that all of us can help you get through this, thrive, and grow. And so that would be my advice. Use the people that can help you. You don't have to be alone out there struggling in your business. You want to use experts that help you, and there's so many of them available at no cost.
Okay, that's a great tip. So yeah, there are a lot of technical assistance providers, that are out there available to you at no cost if you need a professional consultant and you on a shoestring budget, or you just don't want to, pay for some great advice and guidance. So Noe, same question. Any tips that you'd have for folks to prepare to access financing if they need it in this market? And, follow-up question, anything that a business should never do if they're trying to get funded?
Okay. So, my answer is going to be a little bit similar to Andrew. So I'm going to actually answer this question in two ways. Number one, for those that are considered, or thinking about opening a business, is first and foremost, start doing homework. As I mentioned earlier, right now, I think right now your best bet is buying existing businesses, because right now with the pandemic, a lot of businesses shut down, and that's kind of like your best bet. But also do your homework even with those, because we noticed that a lot of people are pulling the trigger on buying these businesses without doing an appraisal on the business, which actually that could be a bit of a mistake, because sometimes they overpay for the business and sometimes they might be upside down. So that's another thing that they gotta be careful about. But right now, even taking advantage of those businesses, that doing asset-based purchases of these businesses might be a great way to save some of the money that is involved to start a brand new business, especially with increasing cost of raw material, like I explained earlier today. So that's gonna be number one. Now, for those existing business owners, I think Andrew pointed out quite well, is really having that conversation with their CPA and say, okay, I just wrap up 2021. Let's talk about, what are we gonna do in regards to this tax return? Because the whole old game of old game of writing off everything you can and not showing anything at the end of the numbers, that ain't gonna work moving forward, especially in this kind of environment. So right now, this is the true time where business owners really need to have that conversation with their CPAs and say, look, times are changing. We need to really look at this and talk about it. This is really the approach that business owners need to start taking now, and really show the true potential of the business. So those are the two on that. Now, in regards to one of the things that borrowers should never really do is never really lie or not disclose upfront how the funds are going to be used, because we'll find out. And once we find out, let me tell you something, we might be wasting your time, your resources, and our resources to make this happen for you, though. So, so full disclosure, and neither Andrew or I were the final decision makers, but I think it's very important that you disclose upfront what is exactly that you're trying to accomplish. So that way, we're going to tell you we're going to be the right players, or our program is going to be the right fit for you. Otherwise, if you give us a different perception and we'll move you into the process, and then you get stuck in the middle. We always get a call back saying, oh, well, you didn't tell me this. Well, you forgot to disclose this upfront, right? So just really being upfront, saying what exactly you're looking to accomplish. And once again, if we're not the right players, we're going to point you out to the right players that are going to be able to do this project if we're not the right one. So I think just really being upfront and discussing everything upfront is going to be very important.
Okay, yeah, honesty is the best policy because, eventually everyone's going to be looking at your numbers, looking at your plan, looking at your financials, and, it'll all come out, as people start doing their due diligence, on your business before they would approve you for anything. So, so that's a good advice. So my last question to both of you, we got about 5 minutes. So take a couple minutes each, and then we're going to open it up to some questions from our participants. So the last question really, is, do you have any recent lending success stories that you could share with us? We've got a very diverse group of participants on the call. We've got some manufacturers, we've got folks in tech, doing apps. We've got people in the logistics business, service providers, real estate, professionals. We've got people doing consumer goods that they're making and distributing and white labeling or developing their own brand. So there's a whole different sort of type of audience here. So maybe you want to share with us just a couple minutes some success stories to inspire us a little bit.
All right, well, I'll go first. This one's not quite done yet, but I know it's going to be a success. So this is a business that's been around 20 years in food distribution to supermarkets. So I'll make it easy. The owner had built a great little business. It finally came time where he's just lost the energy to put back into the business. It slowed down a little bit. COVID didn't help. So it made it a lot tougher model during that particular period of time. I think he had a loss that year during 2020, 2021. He decided he's going to sell the business, and he found somebody who has the same philosophy, will keep the same employees, won't let the employees go. And the gentleman is 20 years younger, and he's a past client of Marble Bridge from the food industry. So we know he's a good guy. He's very smart. He also consults in the industry and also works for a similar business. And so he's going to acquire this business. He figured out a way to acquire it at a very, very good price. And he's got into the business. He's 4 months into it. And his receivables are running about $400,000 a month. So the challenge is the money he raised pretty much helped him keep some of the inventory going, do the transition, paid the owner, and he's got several other types of loans, none of them bank loans. So there's no liens on the business per se. And going forward, he's already signed a distribution right for another company who doesn't want to drive around with the gas prices the way it is, delivering their product to all these stores throughout California. And so he's already got the people doing that. So for him, it's just one more product in. They're giving him a cut on margin, and he's going to add another $2 million in revenue right off the bat, and then go after several other large accounts that he has relationships with. The problem that's going to happen is his receivables are going to explode from 400 to 6 to 800,000, and he can't carry the paper. And so he has to pay food. So it's fresh food. So you got to pay people quick, get the money in, get it back out, and keep the business model growing. So he came right back to Marble Bridge. He knows us. He knows how we operate. And we're going to get that approved this week and probably start setting them up for funding next week. And we'll take a business from $4 to $8 million in 1 year, something a bank can't do. And the gentleman doesn't own a home, so there's no collateral to grab with an SBA loan to make this happen. And it's the perfect fit for both parties. And within a year or two, he'll be on his own. He won't need us anymore. And so he'll graduate from us, maybe to an SBA loan or maybe just to a traditional bank. But it's a tremendous opportunity. And I know the product personally. I've ate it, so I know what it is. And it's a good fit. It's going to be a great success story. So that's the latest one that I'm working on.
All right, that's great. I mean, I think it's really inspiring to know that you could come in the last few years. A lot of businesses didn't do as good as they did before the pandemic, but you could still show that you've had maybe some losses, but there's potential to recuperate and get back to where it was before. You could show that maybe you have some credit challenges, maybe you don't have any collateral, you don't own a home to put up, You could come in and acquire a new business and completely pivot if you wanted to get into something else, and you could still possibly, with the right plan, you know, and the right financing partner, you know, be able to move forward and grow. So that's great. And you know, with that, I'd like to shift over to Noe, see if you would like to share a success story before we open up to some questions.
Sure.
from
So
our participants.
I'll make mine quick. You know, I could spend a whole hour sharing success stories, but I'll make it like in 2 minutes. So the first one actually is this gentleman. He was a U.S. veteran. He was mechanic by nature, even while service. Came back to the country. Started working for a local guy at a mechanic shop. And he started learning about, you know, with the new technology, with electric vehicles. That was his niche. He started just doing that niche. And now, of course, with the gas going up, the demand for his work, I mean, has been increasing over the past few months. So he decided to say, hey, you know what, I'm going to open my own shop. And, you know, approached us, did his business plan. And we actually funded the deal within 3 weeks, which is kind of a bit of a record for a program. But because once again, he did his homework, he had the experience, and he was prepared for it and had the injection. So it's very important, once again, that people are prepared. But you know, minority guy, Latino guy. So I mean, great success story. He's actually gonna be buying a new minivans where he's gonna be moving. He's gonna be like a mobile service going to people's houses. So you know, very unique idea. So very unique approach. The second one I want to share real quick. This is a African American couple where they were thinking about opening the business prior to the pandemic, but when the pandemic happened, the wife lost her job. So she said, like, hey, you know what? I'm not going back to corporate world. I'm gonna decide to move forward with my company. So they opened their company. They spend most of their money fixing the construction as far as the retail space, and they reach out to us after the fact when they have already had the retail space for inventory and working capital. And once again, another success story, just because minority-owned group, startup business. And right now, we actually funded the deal for $150,000 for working capital. So the capital's there, along, once again, people do their homework, and they're prepared for the process. So that's really the bottom line.
Okay, all right, super. So with that said, just have you know, almost 10 minutes left, and I wanted to open it up to some questions from the audience. We did have actually one question that we don't get a lot, but do either of you work with nonprofit organizations? There is one member of our audience that isn't a nonprofit, and I know them well. They're actually a client of the Valley Economic Alliance, and they do a lot of real estate development, you know, mixed use, some commercial, some residential, where they're developing real estate properties, and want to know if there's any financing opportunities for them.
So I'll answer that. Yes, we do nonprofits. I have one that is opening up multiple homes and taking care of patients on behalf of counties who are paying the receivables. They pay slow, and they came to us to expand. The gentleman was a minister. He was just doing 6 patients. Now he's doing, I don't know, 3 or 4 million a year with us in I think, a year and a half time. So the growth was tremendous. And so we were able to fund that as a nonprofit. From the real estate side, I don't do any real estate lending, so I can't help on that side.
Okay. No, I'm not sure if you work with nonprofits, but
it's a bit of a tricky question, but
yeah.
I'm gonna really say no. And the only reason why I'm gonna say that is because with nonprofits, it just gets very tricky, because at the end of the day, many of these, they don't really file any tax returns. So, you know, a lot of the times they have to get, you know, I mean, it's just challenging sometimes to understand their financials, and that's the reason why they complex. So, however, there is other nonprofit lenders that concentrate on with nonprofit entities that are able to make an introduction depending on the project. Mm-hmm.
So there was someone that was going to ask a question, but now he is off. He's dropped off, so I guess we lost him. If there are any questions, feel free. You could let me know, or we can unmute you. But until we get some more questions, maybe I could ask. Let's see here. I have a few.
I think someone asked a question in regards to if we as a company provide vendor financing.
Okay.
So like if you manufacture a product that you like to sell to your audience, and it's something that we get quite often. So like, for instance, like in Los Angeles, food trucks is like a big one right now for all the that don't want to have a retail space, but they want to sell food. I mean, food trucks are one of those that will work. And yes, so basically to answer the question, yes, we can provide some of the financing for some of your potential prospects or customers. But the approach is going to be similar, right? That they have the right financials, that they're able to show us the repayment capacity. So we can work one-on-one with some of your clients. Mm-hmm.
Brett, there's one on here that came up twice. What happens if work slows down and you don't have new AR to fund the loan? Doesn't it become a tough cycle once you start? So that's sort of hard to interpret that question. So I'm going to make the assumption, and I think that was the gentleman who
Good. I asked him to ask it directly, but he is not on the call anymore. So yeah, if you want to try to answer that.
Right. There's other people I know saw the chat, but so
Yeah.
there may be no one else. So, I got to sort of interpret that. But if you're a receivable-based business providing a product or a service, there's no doubt there were businesses that their business was affected with the slowdown, through this economic cycle. So if the business is slowing down in revenue and you're losing money, and you're coming to us for funding, and every month you're getting weaker and weaker and weaker, yeah, you wouldn't be a client for our type of funding, because we're just adding cost and overhead to your business. Really, if someone comes to me like that, sort of in desperation that the business is falling, I'll spend the time to look at the numbers. I'll ask for monthly financials for like a year, so we could see what categories are up in cost, what categories are down, and learn his business and hear how he's feeling with it. And usually from then, I can make a call. So I will say something like, well, yeah, I agree with you. And, you either have to cut overhead or you have to increase marketing to go after new markets. And I can't guide him through all that. I'm not going to be the consultant for weeks down the road, but I could refer him to people that can help him tackle that situation. Sometimes they need somebody with fresh eyes. Again, as we mentioned earlier, bring it to the SBDs here, bring it to Brett, Valley Economic Alliance, bring it to some experts who can look at this business, that have experience in it and can make recommendations. But definitely, you can't just stay in your happy box for any business. You always have to reinvent, update, change, look what's happening in the marketplace. And COVID, is one of those economic events that causes a lot of business to re-examine their whole lives and what's going on and where they're headed. COVID looks like it's going to be around for a while. It doesn't look like, as much as I'm praying, that it just goes away and never shows up again. And so, yeah, you want to, you can talk to lenders like us and we'll try to give you our best view on it, but, and refer you to others, or go ahead and reach out to Brett, and then I'm sure he can guide you in the right direction. And then when you're on the path to growth, that's when you want to talk to us, because that's when you're going to need the cash.
Okay, great. Yeah, I have a question from someone, but I asked her to just rephrase it. So as Mackie's doing that, if you could just rephrase that, and we'll address that in a minute. But as we do, I did want to ask if some companies are certified as a small business, or certified as a minority-run business, or a women-run business. Are there advantages with your organizations for those kind of certifications, and any financing opportunities for those type of businesses?
In my case, well, of course, we'll give preference to that. Once again, as a mission-based lender, we want to make sure that, once again, all these businesses that are certified, they get a good shot of having that access to capital. So in regards to special financing, as of right now, we don't have anything. I know prior to the pandemic, we had some programs that, sometimes maybe there was like a special rate or something for them. But right now, since the pandemic, we haven't really had anything on that at the moment. With that being said, it doesn't mean that there might not be some down the line. But as of right now, we will definitely put priority on this type of prospects.
Okay. Andrew, any follow-up to that or with Marble
Yeah,
Bridge?
just from our end, I mean, a good portion of our clients over the 21 years I've been here have been women-owned, minority businesses, disabled vet, everything in between those classifications. They've gotten certified for federal, for state of California, and we fund them all. I mean, the businesses, they're all receivable based. They all get the funding, but we get a high degree of those because a lot of them have issues trying to get bank financing traditionally, and they end up coming our way, or they're growing so fast. And I have those opportunities as well, as I mentioned, that we're just a better spot. We're not here for 20 years to fund the client. The name Bridge and Marble is to get you from point A to point B with strength. And the goal from my end is to bring you in and help you graduate. Several clients I had one last year become a multimillionaire using our service. They didn't need any bank. They were just done. So those happen as well. So we can get you there. We're very inexpensive as compared to giving up equity. And if a bank's not going to give you much enough money to grow, you don't want to say no to business in any environment. We can get you almost unlimited capital, millions of dollars of receivable finance to get you there.
All right, super. So just so you know, the one question came in about financing government projects. The financing we're talking about today, it has to do with small business financing. So your business may have nothing to do with government, or you may be winning a procurement or a bid for some government project or some public project, and you need financing for it. So, you know, financing opportunities are abound no matter what the sector that you're working in. Like Andrew and I recently worked on a business that staffs cleaners and janitors, and they needed to, they won a contract with LAUSD, and they needed to finance paying for all of those staff to go in and do the cleaning. And that was the type of finance. So it was a small business that wasn't government, but they won a project with the government. So hopefully that answers your question. With that said, we have come to the end of our hour. So I'd like to give, you know, if Andrew or Noe, do you have any last comments you'd like to share before we close out?
All right, my comment would be repeated already. Make sure you reach out to the free consultants that are available to you for Valley Economic Alliance and SBDC and the various players that are out there. If you got a business or you want to open one, you know, go for it. You know, it's your dream to make it happen. And, you know, you're never going to have a perfect environment. As you live through this society, there's always something going on. But if you have a product or service that people need, and there are millions and millions of small businesses in California, go for it. But do your homework and make sure you speak to a lot of people, especially, you know, you can understand the business, you know how to build a house, you know how to do this, but you got to figure out the finance piece. So you really have to become sort of a mini expert in finance. So when you get together and you speak to me and you speak to Noe and you speak to your banker and you speak to CPA and you speak to Brett, it becomes readily apparent which direction you're going to need to go into, and then prepare your business for those conversations. And we'll be more than happy to spend the time with you. And if you're not ready yet, we'll tell you what you're missing. And if you are ready, we're ready to take you on and help you grow.
All right, Noe, any last comments?
I don't think I could have said any better than Andrew, but I think right now the 20-second commercial, call Brett. He's your guy. No, but no, on a serious note, yeah, I think back to Andrew's point, use all the free resources that are available there for you. Just because a lot of the times, you know, when you get in contact with these consultants, they're gonna make you see a lot of things that you haven't thought before trying to apply for that access to capital. You know, many different factors that you didn't think about that are going to be involved in this process. So I think it's important that you do that. So once you're able to go through that process, you're able to understand better and you're better prepared to have a better experience. So so I don't think I can say any better than what Andrew already mentioned.
Okay, all right, super. Well, we got one last question, but you don't have to answer it. If you have more questions for Noe and Andrew, you have their contact information. We'll also send that out to you so you can ask them to go deeper in any topics that we discussed. There is financing for equipment. That was the question. So there's definitely financing if you're trying to purchase or acquire equipment in the future. In any event, I'd like to thank Noe Castillo and Andrew Krone from our two panelists for participating today and sharing some great knowledge with us. Again, if you want to go deeper with them, just reach out to us, reach out to them. Happy to facilitate. And with this, I'd love to thank all of you for participating, and I'd like to pass it back to Sonia, who has a few announcements before we close out. Thanks so much.
Wonderful. Well, thank you so much, Brett, for that fantastic facilitation of a really important conversation and bringing out the finer details of some of that info that can help companies. And I want to add my thanks to Brett, to Noe Castillo from CDC Small Business Finance and Andrew Krone from Marble Bridge. Just sent some fantastic information and really appreciate it. We have come to the close of our meeting, but we do have additional meetings. So check out in the chat for any additional information. We have our annual Valley of the Stars Gala coming up April 8th. We have 3 different committees that are involved and engaged. Our Economic Development Committee on April 14th. We'll be talking about building in the Valley, public and private investment and the procurement opportunities that are available and how you can get a part of those. We have our Education and Workforce Committee that's working on a talent development strategy for the San Fernando Valley region. And we love businesses to be able to tell us the talent you're looking for and what you're facing, some of the ups and downs, and to inform that process. And then we're also very involved with promoting the development of housing. And our next Livable and Sustainable Communities Committee meeting is going to be talking this Thursday about employer housing and how employers can be a part of providing housing and be a part of solving our housing crisis. So just check out our website at thevalley.net/events. You can save the chat by clicking the 3 dots in the lower right-hand corner of the chat screen. And we encourage you to just thrive in your business, keep in touch with the Alliance. Thank you so much for joining us today. We look forward to being a part of your continuing success. And with that, we'll close out the program. Thanks, everyone. Bye-bye.
Thanks, Sonia.
Bye. Thanks, Sonia. Thanks, Brett.